good late afternoon and thanks for joining us. I'm Sage. You're watching 𝐊𝐴𝐿 TV live from Sydney. This is the last show of the day, the last trade. And there's no better way to wind down the day than with today's market close commentary. So let's dive straight in. And the Australian shares ended lower for the fifth straight session on Friday, pairing the opening gains led by sell-offs in materials, tech and the energy stocks. The slump in the commodity prices, coupled with concerns about economic growth, dented the market sentiment. The extension of lockdown in Sydney following record rises in the COVID-19 cases also kept the investors sidelined. In the past 24 hours, New South Wales reported 642 new local COVID-19 cases. The ASX 200 closed 3.70 points lower, and earlier today the index opened flat and gained as much as 0.6% to hit an intraday high. Over the past 5 sessions, the index dropped 2.2% amid the persistent fall in the commodity prices. Among the individual stocks, e-commerce player Redbubble emerged as the biggest percentage gainer for the second day, surging 16% on robust earnings. And on Thursday, the stock rallied over 18% after the global online marketplace reported 58% growth in the sales revenue for the financial year 2021. Gross profit jumped 66% to 223 million Australian dollars, while the earnings before interest, taxes, depreciation and amortisation zoomed up by a massive 930%, reaching 53 million Australian dollars. Some of the other top gainers were poultry producer 𝐊𝐚𝐥𝐤𝐢𝐧𝐞, winemaker Treasury Wine Estates and the e-retailer Kogan.com. And meanwhile, the hearing implant maker Cochlear topped the losers chart by falling over 7%. Some of the other worst performers were miner Lynas Rare Earths and gold miner Pilbara Minerals. Next up, let's see how the sectoral indices performed today. And the equity market witnessed mixed trading as 7 of 11 sectoral indices ended higher. The utilities sector emerged as the best performer with 1.36% gains. It was followed by consumer staples, which gained 1.2% as well. Among others, AREITs, consumer discretionary, telecom and healthcare also ended higher with modest gains. And meanwhile, the materials sector extended declines for the second day, falling 1% on a drop in the commodity prices. And the spot price of iron ore plunged 15% in the overnight trade, amid a slump in demand for the steelmaking material and the concerns about the rising coronavirus, tapering of Federal Reserve stimulus and the tightening of the property policy in China also dragged iron ore prices lower. And some of the other worst performing sectors include energy, information, technology, financials and industrials. In the materials space, index heavyweight BHP Group extended falls for the third day. Among others, Newcrest Mining, South 32, BlueScope Steel, Oz Minerals and Pilbara Minerals were among the top losers. Let's move on now. And the energy stocks also ended lower for the second day owing to a fall in the crude oil prices. And crude oil prices dropped to 3-month lows as investors pull back against the weakening global demand amid the rising COVID-19 cases and rising US dollar. Index heavyweights Whitehaven Coal, Cenex Energy, Santos and Oil Search were among the top losers. In the banking sector, 3 of the big 4 lenders, Westpac, ANZ Bank and NAB, extended losses for the third day, and meanwhile the Commonwealth Bank ended higher with modest gains. And now, before we look at the shares that are in the news today, it's time for a short break.
Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
where the property market is headed next,
what the world is doing to become more environmentally friendly,
apart from tracking the daily market charter.
Be on top of the latest news and announcements
with 𝐊𝐴𝐿 TV.
Welcome back. Thanks for joining us. Sage here, and you're watching 𝐊𝐴𝐿 TV live from Sydney. This is the last show of the day, the last trade. Now let's focus on the shares that hogged the limelight today. And shares of the home and hygiene product developer Pentel shares dropped over 3% post-acquisition news. The company has struck a deal to buy Melbourne-based online hamper and gifting specialist hampers with Byte, the business which is behind household brands such as 𝐻𝐻𝐿𝐴, Softly and Duracell is raising $6 million Australian dollars via a placement to institutional investors to help fund the acquisition. And Atara Life Sciences shares also made the news, trading flat following an ASX update. The biological sciences company said it has launched its IBS-D clinical trial recruitment website. And Atara is working towards developing an evidence-based solutions for gastrointestinal diseases in animals and humans. It has a solid preclinical data to support GARP use in irritable bowel syndrome and IBD, inflammatory bowel disease. It should be noted that IBS is the most common gastrointestinal condition found. It is also a vital cost burden on healthcare. Shares of film industry software solutions provider Vista rose over 1%, making the news. It announced that Movio is a film industry firm of Vista and VU International have entered into a new 3-year agreement to utilise Movio's market-leading cinema campaign management and data analytics platform, Movio Cinema. The company provides film industry technology for studios, distributors, exhibitors and moviegoers globally. And shares of Sydney Airport were also in the spotlight today, rising as much as 0.5%, up to $7.76 Australian, post the half-yearly results. And the only listed Australian airport saw its net loss widening to $97.4 million Australian dollars during the 6 months ended June 30th, 2021, compared with a year earlier as coronavirus pandemic-led lockdown measures impacted the airport traffic. And the revenue fell by 33%, while total passenger numbers dropped 36%. Shares of Cochlear tumbled 7.8%, down to $236.15 Australian after the hearing implant maker released its earnings report for 2021's financial year. The underlying net profit rose 54% in the fiscal 2021 compared to the last year. The sales revenue grew by 10%. Driven by market share gains and the market growth and rescheduled surgeries from COVID-19 shutdowns. And also in the news today, shares of Self Wealth fell 5.5% to hit an intraday low of 34 cents Australian, despite delivering record growth in 2021's financial year. The Australian popular low-cost share trading platform plans to launch cryptocurrency trading in the financial year 2022, subject to requisite approvals. And meanwhile, the revenue of the company increased by 135% in the financial year 2021, driven by a 105% increase in active traders. The net loss narrows to $0.6 million Australian dollars, while it generated positive operating cash flow of $1.1 million Australian dollars. Shares of poultry farmer Ingham Group rallied nearly 9% to touch an intraday high of $4.26 Australian on robust earnings for the full financial year ended June 2021. The statutory profit of the company more than doubled, reaching 83.3 million Australian dollars. This was driven by solid growth in poultry volume and a recovery across the majority of its key channels during the year. Total poultry sales volume rose 4.2%, while underlying earnings before interest, tax, depreciation and amortisation increased 16.6%. And now, before we look at the shares that are in the news today, it's time for another short break. Hi, I'm Sage, and get ready to take the crypto ride with me on 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV. Watch the Crypto Buzz every Tuesday and join the excitement at 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV. From Bitcoins to NFTs to Dogecoin and DeFi, we have updates about everything around these digital currencies. Understand the investing rationale and the risks involved in the space with me, Sage, on Crypto Buzz. Keep watching 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV. Welcome back. Thank you for your company. Sage here. You're watching 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV live from Sydney. This is the last show of the day, the last trade. Shares of blue chip miner BHP ASP Group extended falls for the third day post-earnings announcements, and the stock fell as much as 1.76% to hit a low of $43.88 Australian, while it declined nearly 17% in the past 5 sessions. The loss in shares was also attributed to a fall in iron ore prices, which slumped 15% in the overnight trade. And shares of TPG Telecom, the merger of Vodafone Australia and TPG Group, dropped 7%, down to $6.15 Australian after it reported falls in profit. The net profit after taxes dropped by 8% to 76 million Australian dollars for the 6 months ending 30th June 2021 compared to the same period last year. The revenue rose 71%, while earnings before interest, taxes, depreciation and amortisation increased by 67% to 886 million Australian dollars. Australian property development firm Stockland fell 1.5% to $4.48 Australian following earnings reports, and the company posted statutory profit of 1.1 billion Australian dollars for the 2021 financial year against the net loss of 21 the last fiscal. Funds from operations dropped 4.6%, while net tangible assets rose 5.3% to $3.98 Australian per security. And now, in our next segment, we'll take a look east towards the Asian market performance. And the Asian markets extended losing streaks on Friday, with the Chinese stocks leading the falls as regulatory fears continue to weigh on the investor sentiment. Investors also reacted to China's central bank's decision to keep interest rates unchanged for the 16th consecutive month. China's one-year loan prime rate was left unchanged at 3.85%, and 5-year LPR was kept steady at 4.65%. The shares in mainland China fell as the Shanghai Composite nosedived 1.7% and the Shenzhen component plunged over 2%. In the Chinese Special Administrative Region of Hong Kong, the benchmark Hang Seng Index shed over 2%, led by the Chinese tech stocks. In a similar fashion, Japan's Nikkei was down 0.8%, while South Korea's Kospi traded 0.9% lower. India's BSE Sensex dived 0.5% in the opening deals. But bucking the trend, the Straits Times in Singapore rose 0.7%, while Taiwan's weighted stock index gained 0.5%. Jakarta Stock Exchange in Indonesia was also up 0.3%. Let's now move on from Asia over to the US, and Wall Street ended on a mixed note in the overnight amid looming fears that the Delta variant of the COVID-19 will derail the economic recovery. The fall in the weekly US jobless claims, coupled with signals from the Federal Reserve it was preparing to cut back its stimulus efforts, and also left investors jittery. The Dow Jones fell 0.19%, while the S&P 500 rose 0.13%. The tech-heavy Nasdaq Composite ended 0.11% higher. And now, before we take a look at more shares that are in the news today, it's time for a short break. Property by 𝐊𝐚𝐥𝐤𝐢𝐧𝐞. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on 𝐊𝐼NE TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with 𝐊𝐼NE. Welcome back. Thank you so much for joining us. Sage here, and you're watching 𝐊𝐼NE TV live from Sydney. This is the last show of the day, the last trade. In this segment of the show, we'll take a quick glance over the crypto market's performance. And cryptocurrency prices rebounded on Friday, with popular coins Bitcoin and Ether witnessing surging in buying. Investors reacted to positive news from Coinbase, the US's largest digital asset exchange. The The company's CEO, Brian Armstrong, said its board has given a nod to add $500 million in crypto to its balance sheet, boosted by the development the price of Bitcoin, the world's largest cryptocurrency, by market capitalisation jumped 7% to trade around $47,000. Ether, the world's second largest crypto, also surged 8% to around $3,200 amid the surge in volume. Among others, Dogecoin, Stellar, Uniswap and Litecoin also traded higher. The little-known Cardano rallied over 17% to reach $2.50, and this coin has become the third largest virtual currency in the world as the network developers look to ride the boom in decentralised finance. And that is all for now in the last trade. And with our existing operations in Australia, New Zealand, UK and Canada, 𝐊𝐼𝐴 Media has launched its operations in the US markets as well. And every day in our first show, the Global Market Roundup, you can get the latest from the overnight trading scenario from the US, Europe and the Asia Pacific markets. So on that note, I shall see you as close as possible to 10 a.m. on Monday, live from Sydney. Sage signing off.